So I was doing some research and I saw synthetics, and I'm like, man, why has it been pumping the past 2 weeks? All in the depths of the bear, and everything else is going down. So I was like, hey, what's going on with synthetics? Why is it defying gravity? And why is it going against Bitcoin? If you look back in 2020 in the depths of the bear market, if you remember, Synthetics was actually one of those tokens that defied gravity compared to Bitcoin and the rest of the crypto markets. As you can see here in the price of Bitcoin, you can see the Synthetics price compared to Bitcoin skyrocketed. And you're thinking to yourself, why is it doing that? Is it going to do it again now? So I decided to look into the protocol a little bit more. If you look at one of the Twitter threads I made, last week the rewards were 296%. That 72% number is actually not the correct number. When you're staking and depending on your collateral ratio, you will actually have higher staking rewards because it's based on your collateral ratio. But you could see here I was getting paid 300% and I'm like, this isn't sustainable, man. I mean, if they're paying out 300% in SNX, how in the world is it going to be able to sustain this price action? I mean, it's literally up 200 and something percent. So I'm thinking to myself, maybe it's something else. So I added some additional information to this Twitter thread. If you look at the fees that Synthetics is generating, you can see it's actually ranked 4 out of Uniswap, Ethereum, Aave, and then Synthetics. So it's making more fees in the past 7 days on average than Binance Smart Chain and Bitcoin. And I'm thinking, what? Where's this coming from? This little measly market cap Synthetics is raking in revenue like nuts and ham. We all know Uniswap can do it. I mean, it's got tons of TVL over there. Same thing with Aave. There is billions in TVL on Aave. And Ethereum, it's a massive market cap. Of course it's going to have a bunch of fees. But Synthetics, with a $500 million TVL, how is it doing this? It's under $1 billion, where Uniswap and Aave have multiple billions of dollars in TVL. So how is Synthetics sustaining this? I then learned about something called atomic swaps. To better understand atomic swaps, you need to understand what market they are going after. Think of SushiSwap. What did that do to the trading experience? Well, it actually created liquidity and it allowed people to trade in a decentralized way. This was great, especially if there was a lot of liquidity into the pool, but if there's not enough liquidity, there's an issue. And this is where Uniswap v3 comes into play. I'll show you guys an example of a comparison between these two prices. So let's go ahead and take a look at SushiSwap. You can see here the liquidity for the Sushi token is about $6.2 million. That's cool. That's great. Whatever. Awesome. How much is Uniswap? As you can see over here on Uniswap, you can see it's about 200,000. Let's just call it 200,000 and whatever. It's really not. It's actually about 195. Let's go and see what prices we can get. On SushiSwap, we can get 100 for 0.103757. That's okay, but I mean, let's see what we can get on Uniswap. As you can see over here on Uniswap, if we swap 100 Sushi tokens, we actually get 0.104132. I'm not a math whiz, but I know you can get more ETH if you swap your Sushi on Uniswap. Now, why is that? This has to do with concentrated liquidity. It's different than Sushi's model because with SushiSwap, you actually provide a range of liquidity from 0 to infinity. And with Uniswap v3, you're actually like, hey, I want to provide liquidity between $1 and $2. So you're throwing all that liquidity that you have right in that specified price range. So you're actually able to get better prices. So now that we understand SushiSwap, this was really cool in order to be able to swap tokens or even Uniswap v2. Awesome. Then Uniswap v3 was like, bro, there is a better way you can get better prices. Let's concentrate this liquidity. Then we got into SNX and atomic swaps. This is actually going to be even better than Uniswap v3. So think of what Uni v3 did to Sushi. Now think what atomic swaps can do to Uni v3. That's how you can compare this. But what is the atomic swap? How in the world does this work? Why is it so special? The best way to explain this is with an example. But before we get into that, you need to understand how SNX works. With Synthetics, to mint any of these synthetic assets like seth, S Bitcoin or SBTC, whatever you want to call it, or SUSD, the stablecoin, you must put up synthetics as collateral. They have a mint and burn function right here. As you guys can see here, the minimum collateral ratio is 150%. Anything less than that, it's liquidated, and those liquidation rewards go to the other SNX stakers. So you can mint SUSD and you can burn SUSD. So the SUSD, you use this to mint these different synthetics. Now, when you mint these different synthetics, you can trade with them, you can LP, do whatever, and you can see over here on Curve, you can actually LP with your SETH, not STETH, your SETH, and your SUSD. The rewards are actually pretty juicy. But this is where the atomic swaps come into play, and it's really, really saucy. Warning guys, this is going to be a little bit complex, so I will explain it a couple of times. This is the example we're going to use. In the Curve pool, the SUSD pool, there's USDC and SUSD. And of course there's USDT and DAI, but we're not going to talk about those for now. We're going to use USDC and SUSD as an example. When I go ahead and swap $1 million worth of USDC to SUSD, I'm putting sell pressure on USDC inside that pool. So that means USDC is now going to be worth less because I'm selling it for SUSD. This SUSD is going to be worth more now. So the concept I want you guys to understand is when I swap USDC for SUSD, it puts sell pressure here and buy pressure here. So it juices the price of SUSD and decreases the price of USDC. It goes below peg and above peg. Now in the pool for SUSD and for SETH, we can now get ETH at a cheaper price. Why is that? Because the pool is now unbalanced to where SUSD is actually worth more than $1. So in theory, I'm actually able to swap this stable coin that's worth more than $1 for some SETH. When I do this, this puts sell pressure on SUSD and it puts buy pressure on SETH. When I put buy pressure on SETH, this juices the price. Now, when I juice the price of SETH over here, it's a higher price. I go to the pool with SETH and ETH. I can now get ETH at a cheaper price because remember, I swapped SUSD for SETH, which juiced the price. Don't worry guys, I'll say this all over again. So this SETH that's worth more than what the regular price of ETH is, I swap it for regular ETH. So I actually get additional ETH, which adds more buy pressure on this ETH token. So now that I added buy pressure on this ETH token, remember the USDC I sold in the beginning? It's actually worth less now because I swapped it for SUSD. So we go ahead and repeat the cycle. I take this newly bought ETH, I sell it for USDC, which this USDC is cheap, so I get more money for my ETH. So I'm like, let's go. So I get more USDC, I then swap it for the SUSD. But do you remember, we sold our SUSD for SETH. So that decreased the price of it. So I just juiced the price of USDC, and now I buy the cheap SUSD. But wait, I just bought it. So now it juices it again. So now that that's juiced, remember, the SUSD is now worth more because I just juiced it. And the SETH, remember, I just sold that in the last round. So that means it's worth less. So I go up, bam, I buy it. Now it juices it. So now SETH is worth more than ETH. Because remember, in the beginning, I sold my ETH for USDC. So it dropped that price inside that pool. So this SETH I now have, I can swap this for regular ETH at a favorable rate, or actually more. And then I repeat and I sell my ETH for USDC. Rinse, repeat, keep going and going. That is how the atomic swap will work. Now, of course, I know you're saying like, wow, that's a lot of steps. Well, that's what's happening on the back end. When you're using something like 1inch or you're using something like Paraswap, these DEX aggregators actually aggregate most of the volume. So here's a tweet from Synthetics. You got fees coming from Quinta, which is futures and spot trading. You have Curve because of the atomic swaps. You have 1inch because of the atomic swaps. You have Lyra Finance and Polynomial from the options. So all these different things are actually interconnected with each other from what they're doing. Now you're like, okay, Drake, you just told me in the beginning about the SNX price, but you just showed me how to arbitrage this, and I don't have millions of dollars to do it. I get it. This is where the win-win situation comes in. These traders that are trading, they are profiting. But remember, they are still paying fees. Even though they are getting favorable rates because of the manipulation and the arbitrage, they are still paying the fees. Where do the fees go? The fees go to the SNX stakers. They get 100% of the fees. This is why on the crypto fees sheet, or the screenshot I showed you in the beginning, the fees are off the chart, and why these earning fees are stinking 300%. What the snap? Where is this coming from? It's coming from the atomic swaps. Atomic swaps, and then obviously the options. So that is where the volume is coming from. So it's a win-win for the traders, and it's a win-win, it's a win for the traders and a win for the SNX stakers. Now you're like, oh, Drake, this is too good to be true. And I'm like, yeah, you're right. This is just the atomic swaps and what they're looking to do. Obviously, as more people stake SNX, this will lower the amount of rewards for everyone else because they will be diluted. And after people see this video, some people might find interest in it as well. Even though this is not financial advice and I'm not telling anyone to go into this. And if you stay to the end of this video, I'm going to explain to you the other risk factors that could be involved where you can lose everything. So I'll explain that later in this video as well, so you guys can understand the pros and cons. The interest is coming from the trading volume, which is giving these trading fees, juicing the earning rate, which causes people to be like, whoa, I want SNX. So they participate. And when that happens, you also are getting more fees because it's creating more assets out there, creating this flywheel. So we have this flywheel that's going this way. Remember, they can also go the opposite way. Well, let's go and analyze the data points for the SNX demand. SUSD for trading, because you need this on Quinta.io or Polynomial or any of these option platforms that are with synthetics. You need SUSD to mint any of these cents. SBTC, SETH, SUSDC. You need it to mint the cents. Third, people also want SNX to earn fees from the trades. Fourth, from those who want to earn the fees from liquidations, they also want SNX because when you're staking that, you get liquidation fees. Fifth, you also get the staking reward. So this is where the demand of SNX is coming into play. But there is a caveat to this that you need to be careful with this. The flywheel is mainly circling around SUSD. And the team understands this and the community is eyeing this. If that token or SUSD goes off peg, this is where these issues come into play. This is why they're in favor of increasing the collateral ratio as the volatility of the SNX token takes place. 400% is the target of what they're doing. Of course, the liquidation factor is at 150. And remember how these liquidation events occur. If one person's liquidated, it can cause others to be liquidated. But seeing little tweets and little messages in Discord like this shows that there's actually concern and people are understanding the risks that are involved, which I really like. But these are different things you guys need to understand and keep in mind. And of course, keeping in mind that if there are less people trading and swapping, this is also going to lower the demand for the SNX token because there's not as much volume going through. So these are just different things to keep in mind. If you guys want to check out this full thread, I'll leave a link in the description below so you guys can check it out as well. And you probably would need to just go on to my Twitter profile to see a couple of the other SNX tweets because I will probably forget to put them in the link in the description below. But if you want to stay up to date on Twitter, there actually is a little follow button under the profile and it'll let you follow. So just keep that in mind. Anyways, thanks for tuning in, guys. I hope you guys enjoyed this video. Let's go ahead and hit you guys with a wisdom one-liner. I hope that cleared up a couple things for atomic swaps. Make sure you guys are careful out there. Let's go ahead and hit you with Proverbs chapter 13, verses 10. Where there is strife, there is pride, but wisdom is found in those who take advice. Guys, those old people, those wise people, they got some good advice. Now it's just a matter of listening to it. Thanks for tuning in, guys. If you guys want to jump in the Discord and join our community, links in the description below. We'll see you guys in the next one.